Are home prices finally dropping here in the Twin Cities? Is 2025 turning into a buyer's market? And should you buy now or should you wait until next spring? In today's Twin Cities real estate market update for November 2025, I'm breaking down inventory levels, buyer demand, days on market, and pricing. If you want to know exactly how Minnesota's housing market is wrapping up here in 2025, you're in the right spot. My name is Travis Andersen. Let's dive in. Let's start with the metric that drives everything. It's inventory. Right now, the month supply of inventory across the Twin Cities is 2.5 months, and that's actually up 4.2% year over year. As a reminder, month supply of inventory is the number of months it would take to liquidate the market if no other home came for sale. We also saw a little over 9,100 homes for sale in November here in the Twin Cities, which was down about 2%. And then we were down 1% new listings in November year over year. Of course, with less inventory, it means that there's less options for buyers, and it's really making the home prices maintain still above that 4% trend line that we talked about in October's video. Now, if we do look more local instead of that broader market, we are seeing some other areas shift in the other direction. Cottage Grove, for example, saw inventory rise 30% in November. Rosemount saw a 26% increase, and even Eden Prairie saw a 15% increase in November year over year. So there are some communities that are seeing an increase in inventory, which creates more options for buyers, which subsequently will lower prices in those areas. Obviously, real estate is hyperlocal. Let's talk about buyer demand, because this is where things get a little more interesting. The number of showings per listing right now in November was 3.7, which is actually down 3% year over year. But here's where it gets interesting. The cheaper the home in the Twin Cities in November, the fewer the showings. You heard that correctly. Homes under $250,000 actually had fewer showings per listing than homes that were above $410,000. These higher interest rates, higher costs of insurance, higher costs of taxes are affecting those entry-level buyers much more than it's affecting the rest of the market. Now, as demand softens for all of our sellers, you're going to have to be more conscious about price. You're going to expect fewer showings before you get an offer, and you're going to also expect to see homes sitting on the market for longer. Now, for buyers, you're going to see less competition, a few more choices for you, even with inventory down a little bit. There are fewer buyers, which means more overall listings, and you might have a little more opportunity to negotiate as we come into 2026. Now, how about that question that everyone's asking about home prices? Are they going up or are they going down? Actually, the median home price in the Twin Cities in November was $390,000. That's a 12-month average, and that was up 3%. So homes are actually still appreciating here in the Twin Cities. However, between 2016 and 2020, homes appreciated between 5 and 6%. Between 2020 and 2022, homes appreciated 10 and 11% each year. And so even though we're appreciating, it is much lower than it has over the last decade. And as a result, we're seeing a much more balanced market. Now, how about days on market? Across the Twin Cities, it's taking about 49 days to sell a home. That's actually up 11% year over year. We are seeing days on market increase in most of the Twin Cities. Very few areas have less days on market than they did last year. Again, if you're a buyer, a little less pressure. And if you're a seller, preparation on your home and on price matters now more than ever. Now let's talk about mortgage rates. Mortgage rates actually dropped to 6.25% on average in November. Now that's up from the 12-month average, which is about 6.5% according to Freddie Mac. And then last year, of course, we were hovering around 7%. So interest rates are dropping. I think they estimated it to be around 6% by year's end. It certainly looks like we're going to be there at this point. We do have a seasonal trend here in the Twin Cities where demand should increase right away in January. And if rates were to drop, say, below that 6%, we would see another spike in demand, which might affect that competition that we were just talking about. But what should we do right now? If you're a buyer in today's market and you're looking to move in the next 12 months or so, it might be a good time to start that search, since we're seeing a softening in demand both seasonally and this longer trend. And you're going to have a little bit more time on market to make those decisions. If you're a seller, let's make sure that we're pricing for how the market is moving. Homes that sold 3 months, 6 months, 12 months ago are probably not the best homes to compare prices with anymore, as it really is a moving target. And then also make sure we get our homes prepped and ready so they show very, very well for the fewer buyers that are walking through the houses. As a reminder, there are still buyers and sellers that move in November, December for various reasons. So if you're looking for a more local conversation about your home, your situation, or your city, do me a favor, reach out via text or phone call. Also, check out my other content. My name's Travis Andersen, and as always, all my best to you and yours.